The implied value today of the Bitcoin, today's purchasing power against today's balance sheet, is $43 million. The sats I give today on Nostr, which will buy coffees today, will buy cars in the future. You mentioned Facebook. I'd be surprised if Dell and Amazon don't start buying this year too.
Mark Zuckerberg could be a bigger Bitcoin bull than Michael Saylor. Now, do you think I'm just outlandish here?
I don't think he could possibly catch Michael Saylor at this point.
Jeff Booth discusses the inherent conflict between a credit-based financial system, which requires inflation, and a decentralized system like Bitcoin, which operates in a deflationary state. Jeff argues that the current credit-based system relies on debt, leading to inflation, which is described as a form of theft and centralization. By using a credit-based system, people are participating in this centralizing structure. In contrast, Bitcoin is presented as a decentralized and secure alternative, with deflation as its natural state. Over time, as more people use Bitcoin, there may be a trend of people trading their Bitcoin for fiat money, thinking they are getting rich. However, as the system centralizes further, the reliance on decentralized Bitcoin could decrease, leading to centralized control over people's holdings. Make sure to watch the rest of this video where Jeff explains how centralization could be wiped out by the decentralized nature of Bitcoin, akin to how gold was historically attacked when it became centralized. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Jeff Booth.
If you were saying number go up, you are actually part of the centralizing system, because that system, the natural state of the free market is deflation. We've always a credit-based system cannot allow deflation. Fair?
Yeah. That's
okay.
Fair.
So both those statements are true. So the credit-based system is based on a piece of paper that everybody's measuring the world and thinking the piece of paper is solvent. Right? And that money is lent into existence. So even if you just paid back all the debt, there'd be no money left, right?
Yeah.
So it makes your head kind of scratch, right? So that system requires inflation. Requiring inflation is requiring theft and money. Requiring inflation is a centralizing function. So if you're pricing from the system that is requiring inflation, and this natural state of the free market is deflation, then you're part of the centralization of Bitcoin. And I'm not expecting everybody to know this today, tomorrow, anything else, but in time, that's why I just keep saying, if Bitcoin stays decentralized and secure, it actually doesn't matter if you want to price on the piece of paper or not. It doesn't, and a lot of people will trade their Bitcoin for the piece of paper so they can buy it, and they'll get rich in that process, and they'll think they're getting rich, and they'll trade to the piece of paper. But over time, as that centralizes more and more and more, a lot of people won't run nodes. A lot of those people will trust the centralized entities with their Bitcoin because they got rich in it, and it'll centralize further. And if that continues to happen, because these two systems are opposites, they cannot coexist, right, without centralization. Yeah. So if they can't coexist without centralization, and you're part of the system centralizing, then at some point those people will probably trust other actors to hold their Bitcoin, centralized, and they'll get wiped out by the system that is decentralized and secure, bounded by energy. That is a likely outcome down the road sometime from a mindset of people pricing in a fiat instrument, just like they did to gold. Exactly the same thing. Because what would happen? Gold would centralize, and then you would attack gold.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.